Hi and welcome back to 𝗕𝗘𝗪𝗏𝗧. Today guys, we're going to be taking a bit of a macro look at Bitcoin. We're going to be taking a look at a couple of things on this channel that we don't generally look at all that often, but I feel that it's probably time to take a look at these things, and as there's a lot of kind of information circulating across crypto Twitter, for example, so I thought, why not, let's take a look at it, dissect it down and give you my thoughts and opinions on what I think is going on with this data. So as I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tapping the bell, selecting all the notifications, and in doing so you will be able to be kept up to date with everything that we do here at 𝗕𝗘𝗪𝗏𝗧. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out. It's the first place that we go to notify you of everything that's going on in the crypto space. Let's get right down into this one. There's a few things to kind of discuss. So let's go into the desktop. Here we are on the daily chart, Bitcoin paired up with USDT on the Binance as a data source, in fact, yeah. Okay, so what we're going to do is we're going to start things off by talking about the Wall Street cheat sheet. You'll probably be familiar with this one. There's a few different things that are kind of, on here that's kind of worth noting about, right? So straight off the bat, we can kind of see, the idea of, kind of finding a bottom, hitting a depression, and then going up into the disbelief area. So there's lots of chatter at the moment about saying that we're in this kind of disbelief area, right? And bears are, kind of getting crushed and all that kind of stuff. Now, what's really interesting about this is that there's a lot of people wanting to jump on this because they really want it to be a bullish market. We've been through it a dozen times already about how low the volumes are on BTC. So to kind of think about it being a bullish market when you do not have that kind of data backing it up is quite hard. But not only that, you're also seeing a lot of the really large players leaving the space. I mean, most recently, we've seen a huge nosedive with the Bitcoin sharks. That's players who have over 100 Bitcoin. We can also see it same with dolphins, though. The 10 Bitcoin holders, they're also selling off quite massive amounts, along with the whales, etc. So really, it's only the small players that are actually left holding their bags at the moment. So it's really hard to think of us being in a disbelief area, whilst we still see that kind of fundamental data set in the background, which doesn't really support the bullish narrative. But in this video, what we're going to do is we're going to try to plot this out on the Bitcoin chart so we get an idea as to kind of where things sit. So what we're going to do is I'm just going to make this a little bit smaller, and we're going to work through it, right? So I've got all my words over here. We've got panic, disbelief, depression, etc. And we're going to just plot them out, right? So we can see the euphoria is right at the top there. So that's your all-time high. I haven't actually got that one written out, but we can go ahead and add it. Why not, right? So what we're going to do is we're going to type in euphoria just up here. If I can even spell it today, let's see how that kind of goes. Right, we're going to pop that there, right? So that's going to be our upper area. Then we're going to find complacency. Well, where's complacency? Well, that's going to be right up here, right? So we're going to grab this. We're going to pop it right there. Okay, we can see that this is basically up here in this peak, right? People kind of thinking, it's over, we crash, we're done, we can go up, right? Then you start to see anxiety. That's going to be down here. Okay, you can kind of see that right in there. Denial, that's going to be over this side here. Okay, then we can see that we get the capitulation event. That's going to have to be down here. Okay, and then we haven't actually seen anger. That must be there then on capitulation. And then anger must be down here. And then we can get this little relief rally, which we are right now. And depression would have to be somewhere down over here. Okay, so when trying to plot this out, how else can we make this fit? Can we make this fit a bullish narrative? That's kind of what we're trying to do here, right? Trying to be, actually that would be over there. Is that denial? No, it can't be. And so anxiety, complacency, anxiety, denial. We haven't even got panic in there. So panic must be over here somewhere. I don't even know where panic would sit on this one. It may actually have to be that we are yet to even see some of these other things. But let's see if we can get this to fit in a bullish narrative, right? So we know that we've got this here. Where would complacency sit, right? Complacency is after a run, after an initial pull to the downside. Now, if we really tried, I guess we could try to put it right there. And then anxiety would have to fit in somewhere over here, maybe. And then denial would have to go up one. Then we'd have panic, right? Panic would have to be basically in here as we come on down. Then capitulation would have to be here. Then they'd have to be followed by I mean, maybe capitulation would go there. Be interesting. Then anger would have to be down here, and I mean, I guess you could try to put anger there, and then depression down here, then you're in disbelief up here, right? That's if you're really trying to make it fit, right? And so if we look at it from just that bullish narrative, okay, we've got this cheat sheet, right? We're trying to make this fit Bitcoin. How do we do it in a way that's going to get me loads of clicks on the videos? That's how I'm looking at it. Or how am I going to get my tweets to reach more people? Because, you know, bullish narrative really does spur people on. How am I going to try to make it fit? I guess that's the only way you can try to get that done. Complacency would have to be, and I'm going to draw these arrows in, right? Complacency would have to be up at this peak right here. We'd have to see anxiety kicking in somewhere around here. Yeah, it'd have to be somewhere around there. Then we'd have to see denial coming in on this little rally just here. Okay, we'd have to kind of see it there. And then panic would have to be as we're kind of falling down over here. So that would have to be panic. Then capitulation, which is odd. Like capitulation could potentially go up there, to be fair, which is the I'm going to sell everything kind of thing. And then anger would have to fit in slightly lower. So we'd have to have it right down here as people are really angry. And then depression right down at the very bottom, right? And then only then do you see that the November lows are going to be essentially the bottom of the bear market, with disbelief being where we are right now, and a lot of the bears kind of, you know, feeling like they've maybe missed out, right? That's kind of the bullish narrative. That's the only way I can kind of try to make that fit. But in reality, it's not a good fit at all. And the reason for this is, I'm going to draw it out and show you guys. Let me just remove all these arrows because I don't think that's a good way of looking at the market at all. If we actually kind of, you know, just move these things out of the way, just pull these over to here. Well, actually, if we start to think about this, what do we actually see? Well, let me just pull them all over there. Right, complacency is actually here. Okay, this is the best place for complacency. Okay, after an initial pull to the downside, which means that anxiety has to fit right here as people get really nervous about that market pulling back into that new lower low. Denial is then going to be here. Okay, so that would have to be here, basically not thinking or not wanting to see new lower lows, and basically we're in a bull market. And this is pretty much where a lot of those moon boys were kind of talking about. The June was the bottom is in. It's because there's denial about the bear market, right? And that's really where that sits. And then, of course, you can kind of see that there's panic as we ended up with the FTX saga kind of unfolding and this kind of move to the downside, right? Mass panic was kind of setting in. And then you get the capitulation. I'm going to sell everything down here, which basically means we're not yet to actually see the anger or the depression or the disbelief. And that's kind of where I sit with this one. Like, I mean, I'm not a big fan of this cheat sheet anyway. I much prefer to kind of monitor the kind of the way that the patterns of the data is moving and the psychology of the people buying and selling and all that kind of stuff. But when I'm trying to make something like this fit, this is the neatest possible way that you can kind of look at this market and think that that cheat sheet best fits, right? But let me know what your thoughts are on that one. That's just kind of where I sit with this. I personally not really a big fan of it, but you know, if I'm trying to make it fit, that's kind of where it's going to go, in my opinion, right? And not the best. But let's go ahead and move on to the next piece, right? So the next piece that we're going to talk about here is going to be our Wyckoff accumulation patterns. Okay, so let me just move that cheat sheet over there. So the Wyckoff accumulation patterns, they are something that, again, people are kind of picking up on and trying to run with, and again, gets the clicks if you're in the phase E, disbelief phase E, we're coming into a bull market kind of scenario. But if we try to make it fit, does it work? Does it actually fit, and all that kind of stuff? And so really, we've got to kind of consider a couple of things on this daily chart. Where is the primary support to be found, right? There's PS. Now, there's many different ways that we were looking at this, and we're initially looking at this being down here. Let's see if I can snap that in, which is not letting me for some reason. Let me try again. There we go. So we're initially looking at it down here, but this is not a great fit either. Then we were looking at it over here, and again, not a great fit. But actually, if we were to kind of zoom out of this, we could argue that actually this right here at 32,917 could be the initial kind of support level that's found before we actually had that and then push to the upside there, right? Again, that lines up quite nicely with our cheat sheet for complacency. Okay, so I think that might be a good place to find the PS level for this particular pattern, which means where's that selling climax? Well, the selling climax has to be down here, and it has to be down here because an automatic rally comes up just short of our PS, right? And we haven't necessarily seen that just yet. So when we think about this, if our PS is here, okay, then our automatic rally needs to be just short of it. So we could potentially say selling climax down here, right? And if we're to be super bullish on the market, we might say, look, selling climax is right, if I can snap it in, right there. Okay, then we move up, but then of course you don't have this test of the resistances a little bit higher. Instead, we came down lower. And a lot of people who kind of trying to be bullish on the market are saying, look, that was your secondary test in phase B. Sorry, that was your secondary test. Then we had this move up. Then we fell down into the secondary test of phase B down here, for example, right? And they're trying to make it fit that way. And obviously that doesn't fit. That's not what a Wyckoff accumulation pattern looks like. So we know it's not that. We know that that's not the case. So if this is the PS level up here, the primary support level, then where is our selling climax? And I think the selling climax, we'd have to argue, is going to be down here. Potentially, right? And then if we run with that, well, the automatic rally, again, is not just short of, it would be very, very short, in fact, of actually going up close to the primary support there. And then, of course, you see we come down a little bit too soon into that ST in phase B. Okay, so again, not a good fit either. So we can't really do that one. So where is the automatic rally and where is the selling climax? Well, the selling climax in this particular case, if we're trying to make the Wyckoff accumulation pattern fit, would have to be all the way down here. Okay, that would mean the November lows are the selling climax, and now we're up in this automatic rally. So if our automatic rally were to be here, for example, then we come down into a secondary test. That's not too bad. Okay, and then we'd be up against those resistances a little bit higher than our automatic rally, which is where we are right now. Now, those resistance lines come in more in line with our PS, so that's very possible. Okay, which means that we've not had a secondary test in phase B just yet, and we can take a look at it through that lens. But, you know, if I'm trying to be bullish on the market, it's really difficult to get an accumulation pattern to fit if we're actually following the schematics correctly. There are two variations, and the only difference between the two is the spring event in phase C. So how can we get this accumulation pattern to fit into a phase E situation, right? That's where people want us to be. They want us to be in phase E. So how can we make that work? And we start thinking about this structure. We'd have to really kind of maybe dive down a little bit on the smaller time frames. Maybe we have to kind of just focus in on what's going on down here at those lows rather than actually focusing in a little bit too high. So maybe we're just going to have to look at it down here and start to really think about how this Wyckoff accumulation pattern could potentially fit. So that's what we're going to try and do. We're going to try to do this, right? If we want to be bullish on the market, let's see if we can make this thing work, right? So how does this go? So where's our primary support level? Well, we're going to have to kind of call it here, right? We're going to have to say that that's our primary support. And I mean, if that's not even a great look, is it? Maybe we have to put this, I don't know where they're going to have to put that. That's actually a really tough call. They're either going to put it there or they're going to put it down here. If they put it down here, you end up with that's got to be your selling climax. So I'm going to have to put it there. I'm going to have to do that. Then I'm going to have to call this one a selling climax over here. And then this is going to have to be our secondary test in phase B right there. Then we're going to have a secondary test going up after an automatic rally. So we're going to probably have to put that one around here. And then we're going to have our automatic rally up here like this. That's probably the only way that they can kind of get that to kind of fit in. And that is not a Wyckoff accumulation pattern. And let me explain why. So there's a couple of reasons, right? So the first one is they're either going to look at this as a phase B secondary test or a spring event, okay, which is possible that you skip over a spring event, but it's not possible to skip over a phase B secondary test. But the automatic rally and our resistances does not marry up with our primary support levels. So that's not great at all. But we do see consolidation just up here. So again, that could be that the SOS then taking us up into the phase E. That's kind of, I guess, what people are looking for here and trying to make it fit. But as I said, this is not a good fit at all, right? We'd have to be following schematic number 2 rather than number 1, which is possible. We could do that, right? We can take a look at this one, right? A secondary test in phase B, we rally on up, back up into these automatic rally areas, we collapse down, only to then reverse and go up into phase D, and then out into phase E, right? So if you're really trying to make it fit, now my problem really is that the PS doesn't really fit in well with where it should be. It should be right about there, but there isn't really a support level to be found here until we have this rally up. This is obviously a double top situation. We can see that right in here, and then we move on down. So ultimately not looking overly brilliant. Now, if I were to kind of take a fib level, just curious on one thing, take this down here, you can see that we're fighting this 1.382 area. That's really interesting to me, with the potential of pushing up slightly higher. I said before about 34 is an interesting level, but the 1.618 from a cup and handle point of view is typically what you would expect to see the output of it, out of a cup and handle. I know I'm deviating away from the accumulation pattern. I just thought that was quite interesting. Anyway, getting back to the Wyckoff accumulation pattern, if we're going to try to make this fit, that's how it should look. And of course, we don't have this initial kind of PS level being hit correctly. So for me, it just doesn't fit. Therefore, it's not a Wyckoff accumulation pattern. It's not like it's invalidated or it's validated. It just simply isn't what's happening. And you've got to bear in mind, a Wyckoff accumulation pattern is something that market makers, market manipulators, whale players are doing. So it's either they're doing it or they're not doing it. It's not like you can invalidate it by saying, oh, things just changed, you were doing it. No, it just never was happening. So taking a look at it, it simply doesn't look quite correct to me. So, and again, we have to really zoom in for that, right? And again, a Wyckoff accumulation pattern shouldn't be down here like this, in my opinion. I think we should be thinking about this on a much bigger scale, which takes me back down to thinking about our actual areas, right? And what's going on in there. So taking a look and thinking about it, I'm going to say that our automatic rally is probably going to be up here. So I think that's about right up there. Our secondary test has going to be, actually no, it's not even going to be there, it's going to have to be down here. Our automatic rally is going to be up here. I can snap that in. And our selling climax is going to be down here. And looking at that, then you end up in a much better situation when our PS is up here. Okay, and then of course your secondary test in phase B has to occur. And again, unfortunately, it's a bearish situation. It's not great. And again, like I said before, there's no guarantee that we're even following any of these things. It simply is a pattern that we kind of want to be keeping an eye on as a possibility, but I don't think it's a good fit at all. I don't think it's something that's actually occurring here. So in a nutshell, it's really hard to be bullish on the market if we actually are trying to apply the data as it is and as it should be. It's very, very difficult to look at it through a bullish lens. Yet all I seem to see in the Discord server with people sharing different tweets and different videos, and we just see a lot of bullish stuff, but not really a lot of substance behind it when you actually dive down and you try to apply the logic that makes it a bullish scenario. And unfortunately, I like logic. I like to follow a series of set rules, and I like to make sure that I can make sense of what is being communicated to me in a logical way. And it becomes very illogical to think that we are moving up when people are saying that we're in a Wyckoff accumulation pattern phase E, yet I can't apply it. And when I look at their charts, I can see that they've completely omitted the secondary test in phase B to try to make it fit their bullish narrative. Or likewise, when we take a look at the cheat sheet and people saying that we're in disbelief, and yet I can't draw that up in a way that's making it logical that we're in a disbelief area. So, even the data from the on-chain metrics does not support a bullish narrative. So let me go ahead and bring that up on the screen here and see kind of what is going on. Let me bring in the correct screen there and do that, right? So when we take a look at this, we can acknowledge that the Bitcoin sharks here have been taking an absolute nosedive. Our whales have also been selling off. the Kraken's been accumulating, but again, we know what the Kraken does. In 2018, we saw that they completely dumped on the market after accumulating during the bear market, right? We know that the whales that's basically selling coming out of their positions on Bitcoin, we can see the same with the sharks, right? They accumulated just for this pump, and now they're heavily coming down. And who's left holding the bags? Well, it's the retailers. The retailers are the ones left holding the bags, with big money coming out as fast as it possibly can. So when we take a look at all these things, to me, it's really hard to be bullish on the market. There isn't really enough bullish data that tells me I should be going all in on crypto because we're going to the moon. Instead, I've got everything telling me that I should be cautious, preserve capital, and wait for new lower lows. But let me know what your thoughts are in the comments down below. Do you think I'm just talking absolute bullshit, or do you think I make some logical, sound points? Let me know. And if you found it useful and informative, smash the like button. I appreciate that. If you're new, subscribe. Don't forget to join us in Discord, and I'll catch everyone in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to risk your entire investment. This video is for information and entertainment purposes only. All other videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.